14 of 20 contracts changed. NVIDIA now ranks first on both sides of the board. And after pushing higher this week, the market just faded into Wednesday's lows with the jobs report one session away. So tonight, no prediction and no hype. We have an updated top 10 for calls, an updated top 10 for puts, 2 conditional setups, and 1 decision map for Thursday and Friday. Continue, reverse, or wait. Start with the big picture. On Monday, our bullish reference levels were 748.80 on SPY, 695.65 on QQQ, and 294.66 on IWM. By Wednesday's close, all three were still above those marks. Measured from Friday's close, SPY was roughly 3% higher, QQQ was up 4.3%, and IWM was nearly 3% higher. That says the weekly trend improved. But the last session tells a different short-term story. SPY finished near 769.79, QQQ near 717.30, and IWM near 299.77. All three closed close to their Wednesday lows, with QQQ showing the heaviest fade. That is the tension for the rest of the week. Constructive weekly structure, weakening late session momentum, and scheduled data capable of creating a gap before most people get to work. The evidence was frozen August 5th at 3:18 p.m. Central. These are research candidates, not live entries. Now the accountability check. Tuesday's map said NVIDIA needed the underlying above 208.70 for the bullish case. Wednesday's scanner reference was 221.93, so the stock confirmed that side of the map. The bearish trigger below 197.15 never activated. American Airlines needed a move above 16.40. Wednesday's reference was 16.70, so the underlying cleared the bullish level, even though that contract is no longer in today's top 10. SoFi needed a break below 16.20 for the bearish idea. Instead, its reference was 18.36, above both the downside trigger and the 18.10 invalidation. That bearish map is canceled unless new evidence creates a completely new setup. Novo Nordisk and IonQ were event-gated. Their scheduled reports arrived on August 5th, and we did not have a fully verified post-event outcome of the research freeze. They stay unscored. And this matters. Underlying confirmation is not the same as option profit. We have no approved fixed horizon bid observations for these contracts yet, so there is no victory lap and no invented return. Today's master list reset hard. 7 new calls and 7 new puts. Every contract shown expires September 18th, with 44 days remaining, comfortably beyond our 28-day minimum. The call board is NVIDIA 235, Shopify 160, Carlyle 52.50, Palantir 170, Cameco 100, Alaska Air 55, Freeport McMoran 75, Tractor Supply 35, Broadcom 450, and Goldfields 40. The put board is NVIDIA 210, SPCX 100, Nike 40, Snap 5, Chipotle 32.50, Palantir 150, MC 2.50, JetBlue 6, Carnival 28, and Lucid 6. The rank earns attention, it does not earn a trade. Shopify's nearly 17% headline move is exactly why we do not chase a stock, just because it ranks near the top after an event. Liquidity, price confirmation, and risk still decide whether an idea survives. Here is the clock that matters. Thursday at 8:30 a.m. Eastern, the Bureau of Labor Statistics releases preliminary productivity data. Friday at 8:30, the employment situation becomes the main event. Then consumer credit arrives Friday at 3 p.m. The greatest gap risk comes before the opening bell. A stop cannot protect a long option from an overnight gap the same way it can during continuous trading. And very short-dated contracts can become extremely sensitive as expiration approaches. Our ranked contracts have 44 days, not 0, but more time does not erase event risk. If you cannot accept the Friday morning gap, Thursday's close is a risk decision, not just another candle. The cleanest continuation study is NVIDIA. The contract is a September 18th, 235 call. At the freeze, the stock reference was 221.93. The option ask was 7.55. Volume was 12,806. Open interest was 20,281. Delta was about 0.37, and IV rank was 37.7%. One contract at that observed ask represents about $755 of premium before fees. That is the capital at risk if a long call expires worthless, so affordability is not the same as suitability. The underlying trigger, not the option price, is above 222.20, followed by a hold or an orderly retest. That level is rounded from Wednesday's high. The invalidation is below 214.80, rounded from Wednesday's low. No trade if NVIDIA gaps through 222.20 and never offers a control retest. No trade if the spread widens materially. And no trade if holding through Friday's employment report would create more gap risk than the plan allows. NVIDIA also owns the #1 put position. That is not a contradiction. It is evidence of two-sided interest. Price must choose the direction. The rank does not get to choose for us. The clearest reversal study is Palantir. The contract is a September 18th, 150 put. At the freeze, the stock reference was 159.29. The ask was 6.55. Volume was 1,824. Open interest was 6,105. Delta was about -0.33, and IV rank was 25.7%. That observed ask represents about $655 of premium before fees. Again, that is not a recommendation. It is the scale of the risk. Palantir already made a major earnings move earlier this week. Wednesday's pullback alone is not enough to call a reversal. The underlying must break below 156 and then fail to reclaim it. If that happens, the bearish structure has evidence. If the stock recovers above 166, the reversal thesis is invalidated. No trade while Palantir remains trapped inside 156 to 166. No trade on a disorderly gap through the trigger. And no trade if the option spread no longer supports a clean entry and exit. The call is also fourth on today's call board. Just like NVIDIA, that two-way ranking is a reason to demand confirmation, not a reason to guess. Here is the complete plan. Bull case. SPY holds or reclaims 776.70 and QQQ reclaims 728.40. In that environment, continuation candidates deserve attention, but only after clean retests. Do not buy the first vertical candle. Bear or defensive case. QQQ loses 715.50 and SPY loses 769.60. That would confirm Wednesday's weak close, and reversal candidates earn the next look. Wait case. The indexes stay inside Wednesday's ranges. The signals conflict, spreads widen, or the next scheduled release creates risk you do not want. Waiting is not missing the trade. It is refusing a setup that never became complete. The rule is simple. Rank for attention, price for confirmation, liquidity for execution, and risk for permission. Comment bull, bear, or wait with the level you are watching. After Friday's close, we will record what actually happened, update the master list, and show the misses with the hits. This is educational research, not personalized financial advice. Options involve substantial risk and can expire worthless. Verify live prices, liquidity, events, and suitability before making any decision. One lesson, one ranked watch list, one disciplined process. This is the best chance daily, professional level tracking for regular people with regular jobs. I'll see you after the close.